Hello guys, this is Eric Day from ACS Learning Hub. Welcome back to my channel. This week I'm going to share with you my past experiences before you learn the lesson. So in this video, I'm going to talk about risk management. Well, when I talk about risk management, I would like to share this thing with you. First of all, right now, in this era, we have a lot of search engine, okay, the powerful one, we talk about Google. When you Google risk management, you will see whole lot of risk management, the list coming down for you. What does that mean? It means there are plenty of ways to set up a risk management. Yes, that is correct. So let me share with you. In the past, where I don't have Google, okay, right? Then I learned from individual traders. So some traders were telling me, Eric, if you want to have a good risk management, always go for a minimum losses and the maximum profits. Well, we all want that and we love that, correct? For example, 10 pips of SL, 100 pips of TP. Okay, that's very attractive. I love that. Okay, that's right. So I actually tried that, in a month I go for 20 to 30 trades by setting 10 pips of SL and 100 pips of TP. But guess what? I got stopped out almost every trade, all right? I would say it's 100%, okay? I totally stop out from that. All right, so it doesn't mean that the risk management is wrong, but it may not apply to my strategy. So you see, so one thing about these pips, the number of pips of losses versus the number of pips of profit, it also depends on what strategy you are applying. Okay, so this is something very important that you have to bear in mind. It doesn't mean that you're using any strategy and this standard 10 to 100 will apply to your strategy. So you have to bear in mind the strategy is also one factor that will make the risk management system works. Okay, so second, another thing is that the lot size. You always have to calculate out the account balance versus the amount of lot size that you're going to pump in to get the dollar value profits for each trade. For example, if I'm going to pump in a $1,000 into my live account and I'm going to start trading, telling myself one day I'm going to make $100, that is 10%, all right? So in terms of $1,000 account, how to make a $100? Do I go to 0.01, which I'm going to collect 1,000 pips in order to have a $100, or 0.1 to have a 100 pips, or just one lot with 10 pips? If you're pumping in one lot for a $1,000 account, the lot size is too risky towards a $1,000 account. So lot size is also very important. It's also one of the factors that we should consider when we talk about risk management, not just taking into the consideration of how much we are going to make a day. You get what I mean? All right. So risk management, for this instance, we are always talking about the losses. We are not talking about the profit. Okay. So the losses here is the key factor, right? So the next thing that roll over with this, let me ask you, how much are you willing to risk for this trade? All right? How much? If a $1,000 account and if you're going to risk a $100 losses, that means you can only go for 10 trades, which is too risky. All right? So $1,000, 10% is $100. So if $1,000, 1%, it will be $10. So $10 versus a $1,000 account, if you're making a losses, you are willing to lose $10. Will that $10 hurts you badly in terms of emotion? Well, I believe it's not. So that means to say you have 100 trades to go with each $10 losses versus a 10 trades in the $1,000 account that each time you're going to lose $100. I think that is too much, all right? So when we combine the number of pips to collect or the number of pips I'm willing to suffer a risk there to stomach the losses versus the lot size that give me the dollar value, ask yourself, what is the dollar value which is so comfortable for you that you are willing to accept these losses? And that will be the correct risk management for yourself. Round back from the beginning of the video, I was talking about when you search risk management in Google, there's a whole list for you. Why are there the whole list for you? Because there are many different ways of risk management. There's no standard way, all right? Why are there so many? It's because every individual have a different level of acceptance. So that means to say, each of them in the Google list also provide you with a different ways to do up your risk management that will fit into your appetite for losses. Remember, appetite for losses, but not for profits. Okay, that is very important. Bear in mind, we are talking about risk management. So we are talking about how much are the losses that we can stomach, that we can take in, all right? So that it will not affect our emotions in the next trade. As of today, I know there are many professional traders, well-trained, skilled traders out there, all right? They also have an SL. They also have an SL, they have a stop loss, and how can they actually proceed on to the next trade to recover the losses from the previous trade? How? It's because the losses, they have already managed it so well that it will not affect their next trade, the emotion going to put in, and the analysis, the clear mind to put in into the next trade. So remember, risk management is not just talking about the number of pips, the ratio, how much we're going to be. 1:100, that means I'm going to lose 10 pips, I'm going to gain 1,000 pips. Okay, no, it's not just that, all right? And it's not also $1,000 account, I'm going to make $100 a day. Sorry, $1,000 account, I'm going to make $100 a day, and I'm going to pump in 1 lot, 2 lot. That is improportional. So the risk is getting bigger, correct? So when the risk getting higher, the risk getting bigger, you are going to experience a lot of emotional turmoil, which is no good, correct? Okay, so manage it well so that you will not experience losses like I had before because of risk management, okay? Remember, the level of acceptance are different from every individual. So make sure you got the one that you are very comfortable with and you can accept it 100% without affecting you trading the next one. All right? Okay, so I guess this part here for the risk management is all about the concept. How are you going to do it before you actually bump yourself into the deep shit? All right? Okay, so yeah, that's all for me today. All right, so I hope this video will help you and you can understand much more on this risk management. Once again, remember to click the like button, subscribe, and ring up the bell for me to show your little appreciation for my videos. All right, so I shall see you next week again. This is Everything from ACS Learning Hub. See you again.